Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at LPAT. Uh, Wish you all a very happy new year and hope this year gives you a lot of knowledge and wealth from the stock markets. Let's begin our analysis for the first week of Jan as to what we can expect in the markets. Let's start with the monthly chart. A very, very exponential move for the last 2 months. A pullback will be really healthy, and if that happens, this is the area where we could see the pullback come into. So let me just so that's the area where I would say the pullback might come to look around 20,000 to 19,000 maximum. Based on the monthly chart, the trend is strong and up. This month, today, we had a very volatile session. Intraday markets moved nearly 100 odd points from bottom to up and up to bottom. But strong trend up. Buying is not really advisable at these highs. You will see time correction. You will see price correction based on profit booking, and confirmation shorts is the way to go if you trade futures and options. For investors, there is nothing to worry about. If you're holding good stocks pretty low on the curve, this is just a normal profit booking cycle that we would experience, and in the next couple of months with a lot of events coming on the in the next few months. So on the weekly chart, that's the area of demand zone where it will be really ideal for us to get into good long swing position, medium to long term swing positions. But right now it's too far, maybe around close to 2,000 points. Till then, there is no other demand zone which we can look at going long in this. However, since the weekly candles, this is the area around 21,000 from where price had moved up. And there is a possibility that price might again move up from those areas as we could have some smaller time frame demand zones. Strong trend up, that's the next best demand zone for swing trading and positional trading. Uh, no supply zone, so we'll have to wait for confirmations before you get into any kind of swing shots. Coming back to the daily, so on the daily, the last 3 days, if you see 3 trading days, we have been having indecisive narrow range candles, which shows that sellers are willing to be sellers at these areas, and the buying is matched with selling. That's why the price is unable to move up. If you look at the weekly range, we could expect a move up to 21,400 based on the daily demand zone. And the next areas of demand zone will be at these areas, which is about 20,700. So if you are looking at some shorting positions on confirmation or a breach of 700, you can look for targets of 400, where again you can look at STI longs. A good time to look at doing spreads because India VIX is also high. So you will get good credit for the spreads that you can do. So these are the levels. So I would say Nifty will range between, at least in the coming week, from let's say around number of 22,000 to 21,400. Prices are not unable to sustain about 20,800, 21,800 as of now. So be cautious about long positions, and that's why any spread which strikes about 21,900 to 22,000 should be good for getting into some profits because of time decay. On the 75-minute chart, today it moved up again, failed to go beyond 21,800 as closed beyond 21,800. A strong sell-off happened, and if this continues tomorrow, we could easily see markets coming closer, at least towards the first targets would be about 550 odd levels, and the next one will be 21,400. So on smaller time frame, you could see that this is the area where the selling started. So if we get a pullback above 750, good areas to enter into spreads or shorts with maybe a hedge since the trend is up for a good target of about 21,500. So uh, uh, not good for longs. Look towards bearish positions short term, and For swing longs, we'll have to wait till at least 20,700 to 20,800. A quick look at India VIX. So as expected, India VIX has moved up on the monthly chart. It pierced above that, and this month also it started with on a positive note. So on the weekly chart, if you see, there is clear-cut room for VIX to go till 1820, which would probably be responsible for the markets to come down towards at least, let's say, 21,000 in the near future, 21,000 to 20,700. Remember, VIX going up will definitely tell you that investors are getting a little bit edgy and they are rushing to buy options to uh, hedge their portfolios because markets are really very elevated. No point in buying. You can be stock specific, selective, definitely, no doubt, but index based positions should be avoided on the long side. On the daily chart, which is again probably might pull down till 14 and then make a move towards 16, 17. So watch out for wicks. A quick look at Bank Nifty. Strong up move, Bank Nifty, late party bloomer, but finally managed to give new highs even for Nifty, but very overextended. That's the next area of demand zone where you could look at buying some positional or medium term to swing positions. That's the monthly demand zone. No supply. Bigger pullback can happen. Now, the pullback, when it happened, it can either happen straight if there is any negative news globally, or it could be based on time and price correction, which will be a lower high, lower low kind of scenario in a bearish market. So we'll have to wait and watch how that happens. No supply zone on the monthly. On the weekly, we have these three candles which have been holding the prices and keeping it above 48,000. Once we break 46,800, I think we can expect a bigger pullback till, let's say, 44,500 to 45,000, but only once we breach those levels. That is 47,000 once we breach 47. So prices could move down and then move up. It could remain range bound. There could be time correction. So watch out for that. Don't expect big moves, swing big moves unless we have some good follow through coming in. No supply zone on the weekly. So that's the area which has been pushing the prices up. So it will be a key area to look at. On the daily chart, this is a little bit of a compressive move now can also result in a very strong rally up, though it is making a lower high, lower low scenario. We could see prices can make an attempt to come to these areas on the daily chart. That's about 47,800. So let's say about 48,000 will be the area where you can watch out for quick STI, short-term income longs, maybe towards up to 48,500. Uh, that's the area which is currently holding the markets, the index, and will continue to probably hold. It could range between 48,500 to 47,000. But once we reach this, the next area will be about 45,000 to 44,500. On a smaller time frame, however, the picture is that we did try to move from these areas of demand zone but failed. A good supply zone is found on this 75-minute chart, which you can use as a range for this week from, let's say, 48,700 towards to, that's the area I would look at, 47,600. So that is going to be the range to trade unless we breach 48,700. So price could direct slowly towards these areas. That's going to be our range to play for the next few days in Bank Nifty. All right. New longs can be initiated at on confirmation at about 47,000 to 46,800. This could be good areas for spreads or aggressive shorts with hedges for a good target of 47,600. So overall, uh, I don't have a bearish outlook, but it's the prices are too high on the curve, and profit booking and selling can happen anytime. So longs should generally be avoided, even if you don't get any trades. Avoid longs. or keep it limited to intraday levels or through option strategies. All right. Hope that helps you to navigate this week through the markets. I'll again come up with the next week's analysis on next Monday.